Welcome back to the deep dive. Today, we're diving into a topic that seems to be absolutely everywhere, buzzing in conversations from tech forums right through to dinner tables. Bitcoin. You've probably heard of it, right? Maybe you're even a little intrigued, but perhaps you're thinking, is it actually possible for me to get involved without a massive investment? Well, our mission in this deep dive is to explore exactly that. How to invest a modest sum, specifically, let's say, US $50, into Bitcoin safely and, importantly, responsibly. We've based this on some really comprehensive sources we've gathered for you. In today's, rapidly evolving digital economy, Bitcoin has truly cemented its place. It's the pioneer, the most valuable cryptocurrency out there. People often describe it as not just some digital coin, but really both a groundbreaking financial asset and a profound tech innovation built on the blockchain. Launched way back in 2009 by the mysterious, anonymous Satoshi Nakamoto, Bitcoin's been on an incredible journey, almost unbelievable, really. It's gone from being worth fractions of a cent to now.
Well, as of September 2025, it's hovering around an average price of, get this, US $111,842. And projections, they put it somewhere between US $109,000 and US $120,931, heavily influenced by big economic factors like institutional adoption and, global events. Okay, let's unpack this.
Yeah, and what's really key to unpacking that, building on your point about the price, is Bitcoin's remarkable accessibility. A lot of people hear US $111,000 per Bitcoin, and understandably, they think it's completely out of reach. But that's where its fundamental divisibility comes in. You see, you don't have to buy a whole Bitcoin, not at all. You can purchase fractions of it, tiny fractions actually, right down to the smallest unit. It's called a Satoshi.
A Satoshi.
Right, and it's equivalent to 0.000000001 BTC, just a tiny piece. This divisibility is absolutely key. It makes small investments, like our US $50 example, not just possible, but genuinely practical for you. So we're framing this deep dive as your guide, really, helping you gain an informed, responsible understanding. The aim is to help you minimize risks and give you practical, step-by-step actions without feeling, completely overwhelmed by all the jargon. It's crucial to remember, though, this information. It's strictly for education and exploration. It's not personalized financial advice. Given how volatile crypto markets can be, we always recommend consulting with qualified professionals before making any investment decisions. What's fascinating here is just how easy it can be to start small.
That makes perfect sense. Really important disclaimer there. So for our first segment, let's really dive into those fundamentals. We've touched on its origins, but what truly makes Bitcoin so different from, say, traditional money? And why is investing even a small amount like US $50 such a potentially powerful entry point?
Well, okay, at its core, Bitcoin runs on a decentralized network. What that means is it completely cuts out the traditional middlemen, like banks.
No central authority.
Exactly. No single entity controlling your transactions, no single point of failure. This offers some pretty significant benefits, primarily fast transactions, and often much lower costs compared to, say, traditional international bank transfers. Those can be slow and, frankly, loaded with fees. It's a fundamental shift, really, in how value is exchanged globally.
That decentralization does sound impactful. So, okay, let's bring that back to our US $50 investment. What does that actually look like in terms of Bitcoin? I'm sure many listening are wondering, if it's over US $111,000 a coin, how much am I really getting for my 50 bucks?
Right. Based on that current average price we mentioned, US $111,842, your US $50 would get you approximately 0.000447 BTC.
Okay, 0.0000447 BTC.
Yeah, it sounds like a tiny fraction, I know. But that's the beauty of it. It represents a real, tangible piece of the crypto ecosystem. It's an accessible entry point. You don't need to pour in large sums of money. You're getting a slice of that decentralized network. It proves you don't need to be a whale, so to speak, to swim in these waters.
Got it. And beyond just getting access, many people point to Bitcoin's long-term potential as its biggest draw, right? But what exactly gives it that perceived staying power? Is it really a long-term play, or are we just seeing, a current trend?
That's a critical question. One of Bitcoin's most defining characteristics is its programmed scarcity. There will only ever be 21 million Bitcoins created, period, full stop.
Only 21 million.
That's it. This hard cap on supply, unlike traditional fiat currencies, government-issued money like the dollar or euro, which should basically be printed endlessly. Well, this scarcity has historically helped Bitcoin outperform many traditional assets in terms of long-term returns. Its supply and demand baked right into its code. However, and this is really important, we cannot stress enough that its inherent volatility is real, very real. We've seen periods, sometimes called crypto winters, where prices could plummet 80%, or even more.
80%.
Oh, yeah.
Right.
It's why making small investments like US $50 is actually ideal for beginners. It lets you learn the ropes, understand how the market moves, and importantly, mitigate your risk exposure as you get started. You're not putting your life savings on the line.
Right, that makes a lot of sense. Start small, learn as you go. Okay,
Yeah.
that brings us to our next crucial segment, which I think many of you are really waiting for, the step-by-step guide. How do you actually invest that US $50 safely? This isn't just theory. We want to give you the practical roadmap, the how-to for that initial step.
Indeed. Step 1, and arguably the most important, research and education. Before you commit a single dollar, take the time. Familiarize yourself with Bitcoin. Use the wealth of free online resources available. Understand what it is, how it works, and crucially, how to check real-time prices. As we mentioned right now, September 2025, Bitcoin's value is fluctuating around that US $110,000 to US $112,000 mark. Knowing the current market is fundamental. It'll help you feel more confident as you move forward. Step 2, and this is absolutely critical for minimizing risk of fraud, risk of losing your funds, selecting a secure platform. You absolutely must choose regulated exchanges.
Okay.
We've looked at several that stand out. Coinbase, for instance. It's often seen as ideal for beginners. Very intuitive interface. Plus, it offers insurance against hacks for assets held right there on the platform. You can start with minimum purchases from as low as US $2, and it includes integrated wallets. So quite user-friendly.
Okay, Coinbase is one.
Then there's Binance.us. They offer very low commissions, typically around 0.1%, and also supports small deposits. It's US regulated. They even offer staking options where you might potentially earn some interest on your holdings.
Staking, interesting.
Yeah. Kraken is another strong contender, particularly known for being really security-focused. Strict KYC verification, and yes, they support fractional purchases. And for those in Spanish-speaking regions, maybe look at Bit2Me or Paybase. They offer local support, allow card purchases, sometimes without initial commissions. But let me be absolutely clear. You must avoid unregulated platforms at all costs. Always verify licenses on official financial regulatory websites. Seriously, that due diligence could save you a lot of heartache later on.
Those are definitely crucial steps. But, I mean, with so many options, how does a beginner really cut through the noise? Avoid the common pitfalls when picking a platform, especially if you're just starting with $50. And what comes next? Once you've made that big decision, once you've picked your platform, the immediate next step to actually get your account ready for that first US $50. That brings us to account creation and verification. You'll often see it called KYC or Know Your Customer. This usually involves registering with your email and then verifying your identity. You'll likely need to upload documents like an ID or passport. The process typically takes, say, between 1 to 3 days, but it's mandatory. It's there for anti-money laundering compliance, so it's actually a critical security measure for everyone involved. Protects you, protects the platform, protects the broader financial system.
Exactly. And after that verification clears, you're ready for step 4. Depositing funds. This is where you add your payment method. Could be a credit or debit card, or maybe a direct bank transfer. For our US $50 investment example, using cards offers immediacy. It's fast, great if you want to buy right away, but be aware they usually come with commissions, maybe 2–4%.
Ah, the fees.
Yeah, gotta watch those. However, some platforms do offer the first purchase commission-free, so it's definitely worth checking for those deals. Maximize that initial $50, bank transfers. Off cheaper, but they can take a few days to clear, so there's a trade-off.
Okay, funds are in. Step 5 must be the exciting part. Actually buying Bitcoin. It's surprisingly simple based on our sources. You just initiate a buy order, select a BTC, enter your US $50 amount, and confirm the transaction. Usually completes in just a matter of minutes. And here's a pro tip from the guide we looked at. Once you've bought it, seriously consider transferring those funds to an external wallet. Think of it like moving valuables from a bank vault, which is secure, sure to your personal safe at home, where only you hold the key.
Good analogy.
Yeah. Examples include software wallets like Exodus, or maybe more secure hardware wallets like Ledger. This significantly enhances your security. It takes your assets off the exchange, puts them into your direct control.
Good advice.
Yeah.
And finally, step 6, post-purchase management. Once you own that fraction of Bitcoin, it's wise to monitor your investment. Keep an eye on it. Apps like Blockfolio can help you track its performance in real time, give you a clear view of its value. It's also a good time to consider strategies like dollar cost averaging, or DCA.
DCA.
Yeah, dollar cost averaging. It means investing small, fixed amounts periodically, say, every week or month, regardless of the market price. It's a widely recommended strategy, especially in crypto, to mitigate that volatility we talked about. It smooths out your average purchase price over time, reduces the risk of buying only when prices are at a peak, Kind of takes the emotion out of trying to time the market, you know?
All right, let's break this down further
Yeah.
because here's where it gets really interesting. With any investment, especially one as dynamic as, well, volatile as Bitcoin, there are significant highs and lows. It's a real roller coaster of potential. So let's explore the upsides first. What are the core benefits you should be aware of beyond just the promise of, making money?
Well, the benefits are compelling, definitely, and they go deeper than just a number on a screen. First, yes, that high return potential. It isn't just some vague hope. Historically, Bitcoin's growth has been fueled by its unique scarcity and that rapidly expanding global network effect. This has made it a compelling alternative to traditional stocks, especially over the long haul. It's kind of building a new financial infrastructure. Second is decentralization and accessibility. As we discussed, it offers a degree of partial anonymity and makes global transactions incredibly easy. This is particularly beneficial, potentially, for unbanked populations around the world who lack access to traditional financial services. Imagine sending money across borders in minutes for pennies without needing a bank.
That's powerful.
It is. And third, Bitcoin can offer diversification for your portfolio. It can be integrated as a hedge against inflation, potentially. And historically, it's shown a low correlation to traditional markets, meaning it often moves independently of stocks and bonds, offers a different kind of risk-reward profile.
Okay, it sounds incredibly promising, almost like a financial revolution brewing. But with great potential often comes significant challenges. Risks, too. So let's be realistic. Let's unpack the other side of the coin, so to speak. What are the key challenges our listeners absolutely need to be prepared for, especially when making that first small investment?
Absolutely. Prudence is essential here. One of the biggest challenges, no surprise, is extreme volatility. Bitcoin prices can swing wildly. We're talking 10–20% daily sometimes. Many crypto veterans will tell you stories of those Bitcoin winters I mentioned where prices crashed 80% or more. It's a stark reminder. What goes up can come down dramatically. This kind of rapid movement can lead to significant losses if you don't manage it well, especially if you're new to the market.
Right. Not for the faint of heart.
Definitely not. Then there are regulatory and security risks. The lack of a central government backing means there's no central safety net, like FDIC insurance for banks, and the threat of exchange hacks. It's a very real concern. We've seen historical examples. Think about the collapse and huge losses with platforms like FTX back in 2022.
Yeah, that was big news.
It was. It reminds us that robust security, choosing the right platform, it's all paramount. We also need to acknowledge the ethical and environmental concerns. The high energy consumption for Bitcoin mining, that's a significant environmental issue. There are ongoing debates about its sustainability, how it can become greener. Plus, there have been concerns around illicit use, like money laundering. These are important considerations as regulators try to catch up with the technology. And finally, for beginners, there are definite barriers. The technical learning curve can feel steep at first, and those commissions we mentioned, they can actually eat into small investments if you're not careful or if you're trading frequently. Our sources highly advise practicing with simulators first. Get a feel for market dynamics before you commit real funds. No financial risk that way.
That's a really comprehensive look at both sides, the good and the risky. So for our listener considering that initial US $50 investment, thinking about all this, how do we navigate these complexities? How do you make an informed, responsible decision?
The key guidance here is actually pretty simple, but profound. It applies to any volatile market, really. 1. Diversify your investments. Don't put all your eggs in one basket. 2. Only invest what you can genuinely afford to lose, money that wouldn't impact your daily life if it disappeared. And 3. Commit to staying continuously updated. Use reliable information sources, not just social media hype. These principles will serve you exceptionally well.
Diversify, only risk what you can lose, stay informed. Excellent guidance. So to bring it all together then, what's the final take-home message as our listeners consider dipping their toes in with that first US $50? So what does this all mean?
Well, investing that modest sum, that US $50 in Bitcoin, really offers an accessible entry point. It lets you into the fascinating, sometimes wild world of cryptocurrencies. It allows you to gain valuable knowledge, first-hand experience with market movements, understand the tech, all with a relatively low initial risk.
Right.
Now, if that small amount is held long-term, you hear the term hodling a lot in crypto.
Hodling, right. Hold on for dear life.
Exactly. If you hodled it, it could, according to some optimistic projections, appreciate significantly. Some estimates put Bitcoin's value around US $132,000 by the end of 2025. But again, success here really hinges on your continuous education, choosing those secure, regulated platforms we talked about, and managing your expectations realistically. Don't expect to get rich overnight. Ultimately, Bitcoin isn't just another investment vehicle. It's potentially a powerful tool for financial innovation. But it absolutely needs to be approached with prudence, caution, to maximize any potential benefits and minimize those potential losses. This raises an important question. How might the increasing global adoption of fractional Bitcoin ownership, like we explored today, actually reshape traditional financial inclusion and asset ownership, especially for individual and emerging economies? Extending maybe beyond just wealth accumulation is something truly worth considering as you perhaps embark on this journey.